Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Monday, March 17th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at May corn up 5.5 at 464. May soybeans were up 1.5 at 1017.5, and May Chicago wheat was up 12 at 569. No export sales announcements here this morning. Retail sales were out up 0.2%, which was in line with estimates, better than the downward revisions that they saw last month. So it got a little bit of a rally out of the stock market now, just 60 lower in the Dow here as we start this morning. Guys, good morning. Hope everybody had a nice weekend. Happy St. Patty's Day. I guess what we know to start the week, we got the continuing resolution to fund the government taken care of on Friday. So we averted a shutdown. Looks like we'll get our USDA report here in a couple weeks, which is good news. And then we got NOPA out today at 11 Central, looking for a number close to like 185.2 is the estimate. So with that, Dustin, why don't kick us off with a few thoughts here this morning, and then we'll throw around the room.
Yeah, two main things I would be looking at here is, currency support. We've got the dollar index that's, had a pretty decent sized break in the last, couple of weeks, months, and, coming down within range of that $100 mark on the index. And of course, like the Real is actually back up to a fairly decent level. We've got the Real back to 1746.5, which really is not too far away from where we'd kind of taken off, in the prior 2 weeks. And so if we go back and break multi-month highs there in the Real, I think that would be an interesting development for grains, just because we had a weak period there. And, I just think some currency support, along with the fact that the Rosario Exchange is expecting a 10% drop in Argentinian corn production. And we still don't yet know what the Safrinha corn crop is going to look like. I think both those things could still keep at least a little bit of price support for corn not to go too far lower, just my personal opinion. Maybe even try to stage some sort of seasonal spot to allow for some marketing into the April, May, June timeframe.
Very good. And Justin, we saw funds continue to reduce the net long position in corn, sold about 74,000 contracts or so there last week. Interesting, of the last 3 weeks, they're liquidating close to 230,000 contracts. So getting a little bit closer to neutral here as we go into the intentions report.
Yeah. So it's over 1 billion bushels, and was taken by commercial longs, end users. So yeah, I think it's good. I was talking to actually Ben on Friday about this, but sometimes the funds are really right and sometimes they're not. And there's years where, like in the 17, 18, I can't remember exact year, but the funds, the hedge funds, right, flip from short to long to short like 2 or 3 times in a massive way, and we're wrong on every turn. And they were making the highs and the lows. So, sometimes they're really good trend followers, and we say they, them. We don't know. There's a mix of why they're in certain things, and they could be long or short our markets against equities. So you don't know if they're losing or winning necessarily. We look at it just in our markets, as winning or losing, but you don't know what the overall theme or strategy is for these guys. But they move fast and with huge volume, and we've talked about this, that the size of these funds now, the size of the position limits that are allowed are massive. They're multitudes greater than they were 15, 20 years ago. So yeah, they can move quick. Like we said, they just liquidated 230,000 contracts. That's massive. They could go sell another 230 if they want. There's nothing to say they can't. It is encouraging that we're breaking into, business demand, all those kinds of things. You see that we're, the P&W is the cheapest corn in the world to Asia. Gulf of Mexico is cheapest to a lot of other countries. We were, almost basically the cheapest before we broke. So to Dustin's point, I think there's definitely some kind of a backstop here with just value at some point. And we've seen where selling or, things like that can push things well below value for a period of time. So that's certainly possible. We saw this in 2008, and that was a, kind of the end of the world type feeling where funds, index funds got out, right? That was where the long only hold forever funds actually puked out of all of our markets. And that's where we saw, 290 corn and, 780 beans kind of thing. But, to that point, we're at really good value areas. I agree with Dustin completely that, safrina is far from being made. We're going into pollination, so think of it, we're going into 4th of July weekend almost down there. So it's going to be really important. And we just had a big liquidation. So I think we're in balance, and you have to be open-minded here, like kind of reset and see what the fundamentals are going forward.
Any change in your opinion or things that are altering your opinion on intentions here in a couple of weeks? Yeah.
No, not really. I mean, I think, I think there's my personal opinion, I think there's a battle between, corn on corn and, call it the crop insurance, high subsidy rates, ECO type policies, which I think are going to have a huge subscription rate this year. That combined with, farm bill, I think there's a balance there between that and money issues, working capital issues in the farm economy. And I think those are as real as that. So, I don't think there's going to be, a 97 type gigantic corn number like some have talked about. I think it'll probably fall in that ballpark of 94-ish. We'll see shortly, but I don't think the money's there for a lot of people to plant a ton more corn on corn, personally. So, yeah, it's going to be interesting. I'm glad we're having the report. I know it would have been interesting to see what happens without a report, but I'm certainly glad we do because it helps, set the stage a little bit for what we're actually trading and trying to figure out. So.
Absolutely. We'll transition here quickly, guys, into livestock ride to start the week. A big recovery Friday in cattle, kind of after a sluggish start. Felt like it was driven heavily by the cash markets. And then hogs were kind of quiet and mixed. Nothing real special there. So maybe give us a few thoughts as we start the week.
No, you're right. The focus was definitely on the big cash trade. I mean, we were seeing 203 in Texas and Kansas, so 205 to 207 in the north. So this is definitely, really strong cash trade. We're up 3 to 6, from the previous week. Dress sales 325 is like 9 higher. So it just keeps on going. The buyers have been really aggressive, and you can see it on the chart. It looks like the futures really kind of sussed this out, really saw it coming. So we're just kind of feels like we're back to equilibrium. Beef prices were down a little bit on Friday. So overall, I think you traded a lot of really good news. I think there's still a lot of support here, but overall, seeing the beef prices kind of back down may sour things a little bit coming into the open. But generally, I'd say there's still quite a bit of optimism. We do have a cattle on feed report here on Friday. We'll see what the general consensus is. I've seen a couple estimates so far, but I think right now most people are still going to think that on feed inventory is still going to be around 98 to 99%. And there's going to probably be a huge wide guess of how placements shape up, anywhere between, 10% lower to, 2% higher, that kind of stuff. So we'll see how that shapes up. But that's really where a lot of the focus is going to be as we get into midweek. And Managed Money still adding to their net long position. They'd kind of taken a break, but as of last Tuesday, they had bought 2,300 more contracts. And feeder cattle market has been on fire as well, back to record long for them and the feeder side of things. So it just seems like the demand is still there. I think there's a lot of seasonal optimism going on, but obviously headline trade, and any new updates to any kind of trade policy is going to be a huge factor that I think the market's still going to be a little bit weary of. So we'll see how that goes on the cattle side. But yeah, hogs just kind of limped into the weekend. Nothing too special. Cash was just kind of steady at 97. It was up just 9 cents to close out on Friday. Carcass was up just a little bit here, and bellies, still kind of weak. And I think even though there's this kind of seasonal optimism going on, it seems like we want to see a little bit more out of cutout. And right now, it seems like most of the commitment now in futures is moving out to that June time period anyway. So I think we're trying to factor in that when grills start to fire up.
Very good. Hard to think about grills when we got a snowstorm yesterday, but I think it is coming eventually here.
It'll warm up.
Appreciate the update there, Rye. We'll get those cattle on feed estimates as they come through here later this week. One thing to note before we close here today, still got our special offer going until April 1st. Now that we've wrapped up crop insurance, we're going to be coming into planning intentions. Real big report here sets the stage for us to go to the fields. Want to take a look at your marketing, make sure everything's positioned properly before that happens. Give us a call. We'd love to chat with you. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show there. We're doing it live every morning that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Hope everybody has a safe St. Patrick's Day. Have a lot of fun, and we look forward to talking to you again tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.